As we get word that the world's biggest asset manager, that is BlackRock, filed to list an ETF backed by spot Ethereum on the Nasdaq.
The largest asset manager in the world is now backing both Bitcoin and Ethereum. A BlackRock Ethereum ETF is confirmed. They just submitted a few weeks ago a 19B-4 filing with the Nasdaq. And first, just looking at Bitcoin, with the approval of a BlackRock ETF, the Bitcoin price could hit up to $141,000. This is backed up from a new research report from CoinShares, US Bitcoin ETF launch and the price impact. And if, after looking through the data, BlackRock ETF makes Bitcoin fly, what impact will BlackRock have on Ethereum?
And as you talk about the spot Bitcoin ETF, other countries that have launched it didn't see a massive rally. Why will this time be different?
Well, the US is, of course, the largest pool of capital. And of course, ETFs are only really established in the US. We have seen this a long time, in Asia, how Asia tried to establish ETFs, but people don't really use them. And I think this is because the investor base is very different for the US market than anywhere else. And the US is really dominated by a lot of institutions, and those institutions are using ETFs really in their asset allocation. Of course, we have the registered investment advisor community, and estimates vary from, they manage 5 trillion to even more. But if they move like 1% of those 5 trillion, that's like 50 billion into Bitcoin, right? And I think that could have like a big impact.
And this research report by CoinShares does back up the research done by Galaxy Digital, where they predicted a 74% Bitcoin price increase in the first year after an ETF launch. Again, they based that on the addressable market, the gold ETFs, how much money realistically would flow into Bitcoin. And while Galaxy surmises that there are $14.4 trillion in addressable assets in the United States, one could assume that perhaps 10% of that invest in a spot Bitcoin ETF with an average allocation of 1%, which would equate to $14.4 billion of inflows in the first year. Of course, this would be the bull case. If nobody invests in a Bitcoin spot ETF, then expect nothing. If just 2% of addressable assets invest, expect something. Again, this is speculating that we'll see 10% of AUM, and there does seem to be a correlation between fund flows and Bitcoin price, meaning there does seem to be a relationship between inflows as a percentage of AUM leading to change in price. In fact, let's just look at the last few months.
Well, I'm looking at inflows into Bitcoin, and this chart goes back to the beginning of the year, and we are on the 9th straight week of inflows into Bitcoin, approaching about $300 million. This is the highest week of the year. And just looking, we can see a lot of activity over the last 5 weeks. Why? Whatever happened 5 weeks ago? We got a huge breakout in price. And let's go to the Bitcoin chart, and you can see we are now firmly in the bottom area of all this price history that we had in 2021. Lots of things sorted out in there. Suffice to say, it's going to take a lot to get through there. Is it going to happen slowly, quickly? Depends on the catalyst.
Again, the takeaway in all this is the trend does seem to exist. There is a relationship between exchange-traded products, their inflows, and then price going up.
To put it in numbers, there's around 120 billion US dollars in precious metals ETFs in the US. So that means in gold and in silver. And if you just move, 10, 20% of those, shift them over into Bitcoin, you have certainly sort of something around in the range of like $25 billion of inflow.
And just before we look at Ethereum, understanding this trend, using this trend line, it can help us predict what inflows would have on price. So if we take the aforementioned $14.4 billion of inflows, the model suggests it could push the price to $141,000 per Bitcoin. Of course, no model is perfect. The problem with the estimate of inflows is that it is very difficult to ascertain exactly how much money will flow into the BlackRock fund. The entire sales force of the largest asset manager in the world will now be selling this product.
You're going to have Invesco's sales force, BlackRock sales force, Cathie Wood's sales force, Fidelity sales force, all out selling Bitcoin.
But this is the breakdown. Altcoin Daily will always give you all the information so you can make the best decision for you. This is the fund flows model for Bitcoin. If zero money goes into the Bitcoin spot ETFs, then the price prediction would be about where we are today. Galaxy Digital, the 74% Bitcoin price increase in the first year, was based off of around 10% of the addressable assets under management. If all of them, if 10% put 1% of their portfolio into Bitcoin, the price would increase to around $58,000, 60%, $173,000 Bitcoin. And if everybody puts 1% of their portfolio into Bitcoin, that will lead to a $265,000 BTC. And now what could this mean for Ethereum? Because like we said, BlackRock does have an Ethereum ETF application confirmed. BlackRock in their lifetime total have submitted 576 ETFs, and every single time except once, they've gotten approved. Now, of course, Ethereum and Bitcoin are totally different assets with totally different use cases. One's digital gold. It's aiming to be a store of value, while Ethereum is like digital oil, meaning you need it to be able to use it. Just like a car needs gasoline to be able to run, Ethereum is that gas that makes the system work. Now, of course, the tokenomics are also different. Bitcoin has a finite supply, a capped supply of only 21 million ever, and not all are on the market yet. Bitcoin right now is disinflationary, meaning the current inflation rate per year from the miners is around 1.74%. This will be cut in half after the 2024 Bitcoin halving, but Ethereum has an infinite supply. There is no capped supply, meaning for the majority of Ethereum's life, the supply was inflationary, yet something changed in the middle of 2022. We get an upgrade, some call the burn, meaning because of the tokenomics change, every single time a transaction happened on Ethereum anywhere, a little bit of ETH would be burned. Just in the last 30 days alone, we've seen over 27,000 Ethereum gone from existence because of how much use on the network that directly correlates, leading to many Ethereum days actually being deflationary. Now, this happened in the depths of the bear market when there was little to no new interest in the space. We haven't seen how this will take effect in a bull market. And then something else happened to Ethereum a short time later, known as the merge, where instead of Ethereum having miners, which secure the network, yes, but they also dump Ethereum onto the ecosystem. Miners sell. ETH went through the merge, which turned them into proof of stake, meaning there are no more miners, meaning nobody left to dump their earned coins on the market. But instead, to secure the network, validators hold, you stake. That's even more locked up Ethereum. So the new tokenomics will be the supply shock. The BlackRock Ethereum ETF will be the demand shock, and then understanding that whether we're speaking about Bitcoin or Ethereum per cycle, we do see diminishing returns, meaning every year this asset class matures, we're not going to pump as far, as fast. That green line right there is last cycle. That purple line, which we're not even that far in yet, that's the current cycle for Bitcoin. For Ethereum, ETH's not quite as old, but that orange line is ETH's current cycle. And now understanding all of that, this is the current ETH versus USD chart. While from bottom to top last cycle, Ethereum increased by over 4,358%. If we take that same percentage and put it from the bottom thus far, maybe ETH has a new bottom, time will tell. But in the most bullish scenario, if Ethereum increases by the exact same percent, maybe this will be one of the last great crypto bull runs, like myself and Coin Bureau speculated in our interview. But if that happens, the Ethereum price gets to $42,000. That's crazy. I do not see Ethereum getting that far. I mean, that would be that's irresponsible maybe for me to even suggest, but again, I'm just doing the math. Again, looking at the diminishing returns, we see Ethereum's, again, we don't have that much data, but it's really sort of diminishing returns going down by half as much for the last two cycles. So if that were to happen, not 4,300, but maybe Ethereum goes up by 2,600, that's a $28,000 Ethereum. And by the way, many experts are sheepish with their ETH predictions this cycle because all of them got burned last cycle. They were too bullish and ETH didn't perform like people thought it would. So now they're underplaying it. I think the highest we're sort of seeing this cycle is maybe ETH gets to $10,000, which would be a huge win. If that happens, that's around 1000% increase ROI from the bottom. Let me know realistically what you think. Comment down below. If you got value, like the video if you want to support me. And like always, see you tomorrow.